Welcome to This Week in Money. I'm Jim Goddard. Today, John Rubino, author of the bestseller The Collapse of the Dollar, believes we should not expect much government financial help in the future. Mike Swanson of WallStreetWindow.com takes a look into his crystal ball on what we can expect in the new year. We'll talk to John Rubino right after this.
Blue Christmas, the king of tributes, Randy Elvis Frisky and his spectacular show band, Christmas classics, rock and holiday favorites, and the gospel music of Elvis Presley. Saturday, December 7th, Abbotsford Pentecostal Assembly. Tickets at ontourtickets.com. Welcome to This Week in Money, the source for market opinions. Sitting in for Phil Mackesy, here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, financing, and precious metals, including The Collapse of the Dollar and Clean Money. Well, how do you be a winner in a green, high-tech economy? After coming out soft with the markets declining slightly through the week after American Thanksgiving, all of a sudden it's Good Friday again. What happened? Why?
The stock market really liked the numbers that it's seen just lately here in the U.S., and they were really good on the surface, but beneath the surface, the reports that we're getting are not nearly as favorable once you dig a little bit. The GDP report, for instance, was up dramatically. It looks like the economy is growing really quickly, but the majority of the improvement in the revised number was because inventories are building up. Companies are accumulating more stuff with the hope of selling it in the future. And that pumps up numbers in the near term, but detracts from numbers in the future because that inventory has to be worked off. And for inventories to fall in the future would actually lower GDP. So if you smooth out the effect of that, we're actually growing in the U.S. in 1.5% to 2% a year, which is not fast enough to be considered a robust recovery, especially not for this far into a recovery. It's been 5 years now, so we should be hitting the point of overheating by now if we were following the usual script, and we're not. We're still very slow and really struggling, and the reason for that is because we've accumulated so much debt that acts as a headwind. When you borrow too much money, it slows down everything else. You know, you have to funnel so much of your new income to interest expense, and you don't get to spend it on other stuff, and that's where we are as a society.
Well, who's going to buy this stuff? Because corporations have done their very best to kill the middle class, the people who have powered the North American economy for the last 100 years. You get rid of them, who's going to buy the stuff? Who?
Well, yeah, that's the question. You know,
well, I mean, these companies have done it to themselves, laying off people wherever they get the chance, putting everything overseas. They say, well, you know, look at our share prices. Yes, and who's back home to buy your stuff?
Well, that's going to be the question going forward, because yeah, like you said, we've moved a lot of our best jobs in the U.S. to China, and so the jobs that are left, you know, the employment report also came out just lately here, and it showed, you know, again, another big increase in part-time work and another big decrease in people in the workforce, and so we have more people working right now than we did 3 or 4 years ago, but they're working in crappy jobs that don't pay very much. And that's a direct result of us shipping the relatively high-paying factory jobs to China, leaving us with part-time jobs at Walmart or McDonald's.
Well, the reason Detroit is declaring bankruptcy is all the car plants move someplace else.
Yes. Yeah.
To get away from the American car or auto workers union.
Yeah. Auto workers used to be very much in the middle class. I had 2 uncles who worked at GM plants, and they made good money. They had nice houses.
And they worked damn hard, too, to earn it, I have to say.
They did work hard, but they did not have high school or college educations. Yeah. You know, they didn't have symbol manipulation degrees or anything like that, and yet by working with their hands, they were able to raise families in a nice middle-class lifestyle. And you really can't do that anymore. It's very, very hard to do physical work and still be in the middle class in the U.S. now. And since that's really the majority of the people that are in the country, in any system, you know, most people are going to be doing physical work of some sort. And if you squeeze them down to minimum wage or $9 an hour or $10 an hour, as you said, there aren't going to be that many people left to buy expensive stuff. And so what we've seen lately or actually over the last 10 years, is that as incomes get squeezed and the prices of things go up, people have to go deeper and deeper into debt in order to maintain the same lifestyle. But that means it gets harder in the future to maintain that lifestyle because you run out of borrowing capacity. And that has happened to a lot of what used to be the U.S. middle class. You know, we've all maxed out our credit cards, and we bought the biggest house possible during the housing boom, and now there just isn't that much discretionary income.
Well, I believe everybody around the world bought into the American dream.
Yeah.
Why can I not have a nice house with a white picket fence, a wife and 2.5 children, and a dog and a quarter?
Yeah, and there was a time when that was reasonably affordable. And
that's what we grew up with,
anymore.
Was it not?
Yeah. So we grew up with just one person in the family working and having all that stuff.
Yeah.
And so, things have changed really dramatically. And so when you see these top-line numbers like stocks going way up and unemployment dropping and GDP growing, you think it's a sign of health, but it's actually a sign of us straining more and more to maintain the illusion of prosperity, because what's happening in the U.S. especially is the government's printing huge amounts of money and just handing it out to the banking system, and that money is finding its way into asset prices. You know, real estate is up again, stock prices are through the roof, and just lately some really amazing announcements came out. You know, a painting by Francis Bacon sold for the highest price that a painting at auction has ever sold, and a big diamond just sold for the highest price a diamond at auction has ever sold. So tons of money that the Fed is creating is flowing into the hands of the 1%, people who buy stuff like that. But it's not finding its way into what used to be the middle class. So we're seeing an ever greater disparity between the rich handful of people who are beneficiaries of the economy as it's currently set up and the rest of us. And so the question is, how long can this go on? Because there are a lot more voters in the 99% than in the 1%. So even if there's no insurrection or anything, you're still going to see an electoral shift towards redistribution, which will, taken to its logical extreme, starve the production side of the economy, the capitalist side, and make us even poorer going forward. So we're heading into a time where even if we don't have some kind of a catastrophic collapse because of all the debt we've taken on, that it gets harder and harder to run a capitalist free market system because fewer and fewer people have a stake in that system.
Well, who will be the taxpayers to pay for it?
Exactly.
I mean, if you take a look at the tax burden, where it's gone, corporations pay virtually nothing. Rich people know all the loopholes. The middle class was carrying everything, but when everybody becomes lower class, hell, you don't even qualify to pay taxes. You're collecting welfare.
Not only don't you qualify to pay taxes, but you're more and more willing to vote to redistribute wealth from the guys who seem to be doing so well back to you. And so you get a system that is very redistributive and very hard on entrepreneurs. And so they are able to create less and less wealth going forward. So you enter into kind of a death spiral in which
I know.
I call
it the eat the rich syndrome.
Yeah. And that's one way it could happen, but we also have other death spirals emerging in government finances, for instance, when the big countries of the world have borrowed so much, so short term, because interest rates were so low there, that if interest rates ever go back up, it blows this gigantic hole in government finances, because they have to roll their maturing debt over at higher and higher rates, which raises their interest costs, which raises their borrowing, which weakens their currency. So we're heading into a time when all the trends are going to be pointing towards instability. And that's what's really scary about where we are, because you've got the political momentum towards redistribution, and you've got the financial momentum towards some kind of a crack-up boom or a death spiral in which raising borrowing costs blows holes in everybody's budget. And there doesn't seem to be any solution for this. There's no real way out of it because we've borrowed so much money.
Some people have suggested that we might see the same kind of riots we saw in the 60s when people were fighting for civil rights and fighting to get out of Vietnam. I mean, that was a crazy time, but people, when they feel desperate and pushed to the wall, they do stupid things.
Well, yeah, political unrest is a normal part of financial crisis. When people lose hope and they feel like they're being screwed over by the system, then they don't feel like they want to just sit home and take it. And it becomes very easy. You know, in Europe, this happens all the time, where you have these general strikes that just shut down the economy, and then the government caves and gives them whatever they want. And
France has a general
strike.
Yeah, I was going to say, it seems to me France has a general strike every second week.
Oh yeah, they do that for fun, I think.
It's the national
the one time I visited Paris, the most of the town was shut down because of a big strike, which was fun, but
I was there during the energy crisis in the 70s. And so Paris, City of Lights, we book a tour, pay good money for it to see all the lights, all the monuments lit up, black. The whole There was no electricity to light up the city. It was dark.
Yeah.
And everybody in Europe takes July and August off too.
Mm-hmm. Yeah.
You know.
Well, Europe is kind of a special, very extreme case because they basically did cut themselves these incredibly nice benefits. And they didn't think through how they were going to pay for them in the long run. So they've got a demographic issue where a lot of Parisian baby boomers or European baby boomers are starting to retire now, and there's no money set aside to pay for their retirement. And current workers have, you know, like you said, a month of vacation and really cushy work rules, and so they don't produce enough to carry the load themselves. And so it's not clear how the European system survives much longer with all the unfunded liabilities they have to cover and the lack of productivity in the current workforce. So, you know, they've got a special set of problems there. In the U.S., ours is more just we've borrowed so much money and we've sent so many of our jobs overseas that we can't cover our interest costs anymore. And it all leads to the same place, which is some kind of a reset where the debt becomes overwhelming and then we either collapse under the weight of it or we inflate our way out of it. And I see the second option as, because it's vastly more politically palatable in the short run, as the one that everybody has chosen. And so we're going to aggressively attempt to lower the value of all of our currencies going forward, the yen, the euro, and the dollar. And so we get Jim Rickards' currency war, competing devaluations, until people figure out that it's explicit government policy to make the currency less valuable year after year after year, and then they stop wanting to use that currency. So out there somewhere is a loss of faith in both the specific currencies themselves and the concept of fiat currency. And that's when everything changes.
More with John Rubino next on This Week in Money.
Always consult your investment professional before making any investment decision.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're talking with John Rubino, author of several books about finances, including a very well-selling book, The Collapse of the Dollar. Well, we're talking about governments being under severe pressure around the world to deal with debt. What is going to happen to the elderly if there is no money in the account to pay for their old age home or their medical care?
Well, that's going to be the question, and it's not just the elderly, but it's everybody who depends on government promises that has a very rude awakening ahead of them, because both the government's pension plans, like Social Security and Medicare, and the pension plans of states and localities have all been grossly underfunded. We just flat out haven't put enough money aside to cover the liabilities as they're beginning to come due. And so everybody's going to take a haircut, and it's going to be huge by the standards that we have come to expect. In other words, you lose 5 or 10% from a plan, and that's bad, but it's not horrendous. But these are going to be 50, 60% cuts or more, because that's what it's going to take to bring the numbers back into balance. For instance, Chicago's municipal pension plans are only like 30% funded, and they need.
What about
to
Detroit
80%.
Declaring bankruptcy and all those civic workers?
And they in court they just got a ruling that said the pension plans are on the table. They can cut them as part of an overall package of scale backs and tax increases and whatever else they're going to do to try to restore the city to solvency. And so the people who retired off of their, teacher salary and expected to have a nice pension going forward, or GM workers or whoever, they're all going to find out that they get a lot
I know
less.
a lot of government workers take lower salaries with the promise of a richer pension.
It used to be that way. Now salaries have risen to the point where they're actually better than the private sector.
Yes,
and
I just saw a story on that.
Way sweeter.
Companies are losing out great talent because of that. People are going into the non-profit sector. They're finding it more profitable to be a non-profit.
Well, for the last 20 years, the public sector unions have had more clout than private sector unions, so they've been able to negotiate better and better deals. So that you hear these stories about firefighters making $130,000 a year and then retiring at the age of 50 with 90% of their last year's pay forever, plus health care. These are the kind of deals that
happens
got
here.
cut.
20 years as a police officer, you retire, your pension is whatever your last rank paid you.
Yeah, and
many of them are very young when they retire, so they start another police job.
Sure.
And so,
and a lot of states and cities are finding that they have to put more and more of their current budget towards retirees. And it's squeezing all the other services. Libraries have to close early, and the roads aren't cleaned as well as they used to be, and the police come later because there are fewer working police.
Well, sure, in Vancouver, they've retired 12 fire vehicles, have laid off all the firemen involved. They've closed the busiest Coast Guard base in Canada in Kitsilano to save money. Times are tight, and a lot of these people are not keeping their jobs.
And the thing is, Vancouver is an extraordinarily rich city. They are far from the cutting edge of this process. It's a lot worse in a lot of California cities and Illinois cities.
Well, I think Vancouver is safe. People say, how come the real estate is so high? Come on, people, the bubble's going to burst. 50,000 people a year move to the lower mainland, Greater Vancouver. That's a lot of folks. When I came to Vancouver, there were 1 million people. There's now 2.5.
And completely
50,000 people, that's a mid-sized city, isn't it?
You live in one of the best cities in the world.
Yeah, I just look out my window at the ski hills. Well, we call them hills, they're mountains.
Yeah.
Or on CNN, they once said during the Yeltsin-Clinton summit in Vancouver, the bright lights of Whistler glistening in the Rocky Mountains behind me. Well, those are the coastal mountains. Whistler is about 150 miles away, and the Rockies are about 700 miles away. That's when I realized CNN does not know everything.
Nah.
Well, I mean, we're sitting there laughing.
They got the gist of it right, because there are pretty lights on the mountains.
Well, Matt Lauer, the Today Show, was done up at Grouse Mountain. And to meet the Eastern audience, they had to get up at 1:30 in the morning, get ready to broadcast at 5 in the morning Eastern. Mm-hmm. Well, that's the glory of doing a morning show. I did those for several years.
Tricky thing about the West Coast, the last book that I did, there were a lot of morning interviews to be done with East Coast drive time radio, and that's 5 o'clock in the morning our time out here. So I was up early. Yes,
I get phone calls from Toronto all the time. It's 6 o'clock in the morning. Hey, oh, sorry, we forgot. But I guess New York thinks it's the center of the universe, and we rotate around it. In Canada, everybody thinks in Toronto that the universe rotates around them. And we get to laugh about it, but it's true. They don't even think about people outside their regions at all, ever, it seems.
No. Well, I mean, in America, we're the worst in the world at that kind of mindset, because we really don't know anything about what goes on beyond our borders, and very little about what goes on within our borders. But that's a whole separate problem.
We've had actors come up to Vancouver. We've had actors come to Vancouver who are surprised that everywhere they go, they go, beautiful city, lovely people. How come everywhere I go, they insist I pay in Canadian dollars? Why is that?
Yeah.
I've had friends from L.A. and San Fran who are shocked to find out there's a border they have to cross.
Yeah. And then they're shocked to find out that you have cars and not sleds with dogs.
Yeah, we live in igloos. Yeah. Actually, I lived in a sod roofed cabin. We planted carrots. Whenever you wanted a fresh carrot, you just pull it down off the ceiling. You get tickets for double parking your dog sleigh. Canadian gangs like the Vicious Skidoo gang, the Hex Angels. Yes.
So you have snowmobile gangs up there.
Yeah, right. It's too damn cold for the bad guys to do that.
Yeah.
You have to know.
But you guys economically are I think in very good shape because per capita you have more natural resources than almost anybody else in the world.
And our government promises to give us a balanced budget next year.
Yeah. Well, it's easier.
And before the recession, we had a surplus.
Yeah, yeah. And a big part of that is that you're able to sell all that lumber and that gold and everything else that you've got to the rest of the world.
There was also a London study that said out of every country in the world, the one that will benefit the most from global warming is Canada. It will uncover natural resources never known about before as the ice cap moves back.
There's a company up there called Sprott Resources that is building one of the biggest farms in the world. It's, I think, a million acres, if I'm not mistaken, already. And the idea, I think part of their idea, is that land will benefit from global warming because it'll become more and more hospitable for different crops.
Where I grew up in Peace River, which is 300 miles north of Edmonton, which is pretty far north. When I was little, we had viciously cold winters, wet springs, mosquitoes like you wouldn't believe. The last time I was there, I just went for a jog without a shirt. Because before you could never do that because of the bugs. The bugs are gone. They have a drought. It's much drier than it used to be. And I talked to a climatologist, and he said, Peace River, it's had the most climate change of any area on the planet. So, yeah. And how can we take advantage of this change, or is there a way?
Well, resource-related companies, to the extent that they can find more resources in the ground that used to be frozen, are going to do real well in Canada. So the Canadian mining industry, possibly the Canadian lumber industry, depending on whether the
the pine beetle has just devastated our forests here. The pine beetle is just wiped out. And now it's attacking spruce.
Now, see, that's one of the downsides of global warming. Yeah, yeah. Although we're looking at some of the same things here, but we've got a new kind of bug that came through. And so we're going to import some little wasps that feed on those bugs. And so I'm just waiting for the unintended consequence from that.
Oh, terrific. John, is there a website people can go to take a look at some of the stuff you've discovered? Yeah,
I run dollarcollapse.com, which is updated daily. It's kind of a chronicle of the stuff that we talked about today.
Thanks a lot, John, for talking to us.
Sure thing, Jim. Anytime.
Right. Best of the holiday season.
Thanks, you too.
After the break, Mike Swanson on This Week in Money.
Blue Christmas, the king of tributes, Randy Elvis Frisky, and his spectacular show band, Christmas classics, rock and holiday favorites, and the gospel music of Elvis Presley. Saturday, December 7th, Abbotsford Pentecostal Assembly. Tickets at ontourtickets.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Mike Swanson, publisher of wallstreetwindow.com. Well, what a window, what a view you had this week.
Yeah, it's been an interesting market. You know, we slid down in the United States the first week of December, and of course today we're up. But, you know, historically, the stock market tends to rally at the end of the year. In fact, December over the past 50 years has been the single best month of the year for the Dow Jones stock market. However, the first week of December also usually sees a pause or a pullback of some sort. And we came into this month with the stock market having a wonderful November and going up to new heights and almost making people very dizzy with excitement. And it was sort of due to have a bit of a pullback, and we got it. It could even pause or pull back again next week. But regardless, it does seem like things are lining up for an end-of-the-year rally.
Well, I was just wondering, did everybody spend all their money on Black Friday and Cyber Monday and finally found something to put into the market on Friday?
Boy, it sure
almost
does
looks
seem
like
like
that.
it.
Yeah.
It certainly does. But I there is something to that, because the statistics is looking at what American investors have been doing the past couple of years, and they've actually pulled money out of the markets since the stock market bottomed in 2009 and fled into CDs and in interest-bearing instruments. And now, apparently, they're starting to put money to work in the market. In fact, I read an article in Bloomberg that said this year they put more money into the market since they did in the year 2000, when the market, of course, had the internet bubble. And I think it's a part of almost desperation, because a lot of these people, their CDs are coming due, they're getting this money, and they don't have anywhere good to put it, and the market has been going up without them, so they're putting the money into the stock market because they don't really have nothing else to do unless they want to spend some of it over the holidays like you suggested.
Well, I'm also wondering, are we going to see a crash in some of the tech stocks? I mean, Twitter, IPO, they raised $19 billion. They hadn't made a penny. And they said, gee, gosh, we'll have to think about how to make money now. Other social media going, okay, we have all this money, but they haven't made any. I mean, why would people put their money there, or have we forgotten about the tech crash?
Well, I think that people just don't really know anything. They know, they see Twitter and Facebook and these companies, and they don't know anything about them. They don't know that they're losing money. They just know that people use them, and it's sort of a fad. And I do think, I think one day they will essentially crash or collapse, but I think the real bubble is, you're really talking about a half dozen stocks. I think the real dangerous bubble is actually in the stocks that people feel very comfortable owning, and have gone up a lot, and make up a big portion of the S&P 500, the consumer staple stocks and big name U.S. consumer companies like Johnson & Johnson and Procter & Gamble, and basically companies that are consumer oriented, but pay dividends, and a lot of the American investors have flooded into them, and they have gone up and done very well. However, these stocks have extremely high valuations. They're essentially doubled twice when you look at the PE, double what they are historically, which is pretty scary to me. I don't think we're about to see them crash, though. I don't think we're about to have a bear market. But one day there will be one. I think it's a few years off, but it will happen, just as the sun does set every day. Bull and bear markets are a part of the natural order of financial markets. But when it comes, it will be a big wipeout for a lot of people, because I think those are the stocks that are very widely owned and are really going to hurt people when it happens.
Well, I've heard the so-called smart money, the people who got into the market early, they've just followed the general rule, buy low, sell high, and they're going, look, we're at record highs. It could go higher. I'm selling now. I know I have that money in the bank. You wait 2 weeks, it may not be there.
Well, I think one key to investing is exactly to look for things that are low and to buy those things. And there are opportunities to do that. And that's what I personally have been doing the past year or two, and I still see great opportunities like that. But these are opportunities outside what the average person does, which is just buy these S&P 500 and Dow stocks. So to give you an example, or a couple examples, last year the markets in Europe made a huge bottom, and they've gone up since then. But they started a bear market in 2011 and bottomed last year. So they're 1 year into a bull market, and I think they have a lot further to go. The stock market in Argentina went into a bear market too, but it didn't really start to go up until this August. So it spent about a year forming a base after a bear market bottom, and it's just going up the past couple months. And there's stocks there that have PEs of 2 and 3, with the Procter & Gamble's and Johnson & Johnson's have like closer to 20. So you're talking about, you can buy stocks in Argentina and pay 2 to 3 times earnings, and I think you can make a killing doing that. So those are the things I'm buying. And then, of course, we got gold, we got commodities, which are at lows. So,
yes, and again, I ask people, well, wouldn't it be a good idea to buy it now? Because I've heard from my gold analysts, China has bought at least all the physical gold produced this year if not more than that. And, I mean, they're just sucking up gold like you wouldn't believe.
Well, you can think back to 2000. I don't think the market is necessarily topping, but in 2000, that was the top, the internet bubble and all that business. And at that time, oil was like below $18 a barrel in 1999, and gold was below $300 an ounce. So, and they had been in bear markets for quite some time. And if you would have sold out of the NASDAQ and the Dow back in 2000 and bought oil and commodities and gold, you would have gotten filthy rich. And you essentially, the people listening, have the similar opportunity probably to do the same exact thing, to buy these markets after they've been in a bear market. The problem people have, though, is I think people know that makes a lot of sense, to buy things low, to buy things after they've crashed. If you would have bought stocks in 2009 after the stock market crashed and held since then, you could have made a fortune, but no one can do it because the news is almost always negative, and people will tell you you're stupid, and if you talk to people, they just tell you how they're losing money or they don't care, and people pay more attention to things trading at new highs, and they're afraid to miss them. It's the Twitters and the Facebooks that mesmerize the crowd, and they're not paying attention to the diamonds in the rough and the gold stocks and so forth.
I was going to say, speaking of diamonds, the biggest diamond mining field in the world is about to open near Yellowknife, Yukon Territory. And
oh, really? I didn't know that.
Yes, they just got permission from all the government committees. Go ahead. It's a go. And it's going to be a
publicly
giant.
Traded?
Yes, it's a 50% partnership with De Beers and Mountain Province Mining, I believe. A Canadian company. And they expect to pull $50 million worth of diamonds out every month for 20, 30 years.
I don't know. I'll have to look it up. I don't know anything, about it. This is the first I've heard of it.
Well, it's way up north. There aren't a lot of people around to talk about it.
Yeah. Well, but I would suggest to the people listening, that might be something worth looking into, because you can, when the mining stocks have been depressed like this and fallen like this, often you can find emerging producers and small companies that are growing that end up having so cheap of a valuation, because the sentiment in the whole market is bad, that it's like, it's like hitting a home run, to invest in them.
More with Mike Swanson next on This Week in Money.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Mike Swanson, publisher of WallStreetWindow.com. Well, we like to take a look at the new year and where we should be putting our money. Is the bubble going to break in the stock markets in the new year? Or is this one of those you just bite your lower lip and watch?
Well, if I'm correct and we get an end-of-the-year rally, I think we'd actually be set up to have a pretty nasty correction in the first couple months of the year. Historically, the S&P 500 in any market that's in a bull market will tend to have a pullback once or twice a year to its 150 and 200-day moving averages, and they tend to act as support and become great buy points. But normally these pullbacks are around 7 to 10%. Well, the U.S. stock market, had pullbacks like that in 2012, 2011, 2010, but not this year. And we were essentially very overbought in November, and we're not really pulling back that much, considering that yet. And the sentiment, according to investment surveys such as Investors Intelligence Report, is showing that investors are extremely bullish in the stock market. That survey says 57%, which for that survey is an incredibly big number not seen since 2007, I believe. So that would suggest that things are, really frothy and we're due for a substantial 7 to 10% correction. But because of the seasonal patterns, I don't think it's likely to happen in December, but is likely to occur sometime in the first quarter of next year once this current rally really does fade away. And I think what people should do, you can buy stocks this week and next for the end of the year rally and whatnot. But I think the real great buying opportunity will be next year when there is a 7 to 10% correction, and I'd be looking, to buy stuff not necessarily in the United States, but all over the world in these markets that are cheaper. And when it comes to gold and commodities, one thing I think it's worth noting is, if you remember a couple years ago, people used to talk all the time about risk on and risk off happening in the market. And what was happening back, this is about 2 years ago, is everything would go up together and then fall together because these hedge fund robots were pressing buys and everything at once. Well, over the past year, that's not happening in at all. And what seems to be occurring, or has occurred, is that the U.S. market, for a period of time, will be the strongest market in the world, and everything else will falter, and gold and commodities will kind of limp around or fall, and then leadership will shift, and the U.S. kind of lags or corrects, and all these other markets tend to do really well. And that's actually becoming more pronounced, where the period of time where the U.S. is leading is shrinking each time from a year to 6 months to, whenever this ends. What that suggests to me is I think next year, it could be that gold and the gold stocks are bottoming here. It will bounce in the end of the year. But I think next year at some point when the U.S. market corrects, if these other markets hold up, that will be a sign that they're getting ready to just totally take off. So I think it's really important for people to keep their eye on these mining stocks to see, what do they do when the market in the United States has a correction next year? Because if they just sit there and don't drop at all, that'll tell you that they're so oversold that there really aren't any people left to sell them. And that means they're going to be in a position to take off like a rocket and really be the big story, from then on.
One of the rumors going through the Canadian business community right now involves Barrick Gold, the world's biggest gold mining company. And apparently they're in secret negotiations with the Chinese because, as everybody has been talking about the last while, the Chinese have literally bought all the physical gold produced this year. So they want maybe a constant price, a supplier who will guarantee a price, probably anticipating a big hike in the price of gold.
Yeah, they're very intelligent in China and forward-thinking, and, they're, I don't know if it's been news where you live, but last week there was all this news about the United States and China having a dispute over the sea lanes, and there's they call it the Asian pivot in the United States. It's a policy of trying to become more aggressive militarily with China and, increase the tensions and spend more on the military here and stuff, but, I don't think that's smart policies, but that's what we do in the United States, whereas the Chinese are doing business deals all over the world, and they're the next emerging superpower, and we're kind of clinging on, but they're doing smart stuff.
Well, I always wonder when countries are willing to risk people's lives over a couple of pieces of rock that nobody's ever going to live on, or maybe two people do. You see these disputes all over the world all the time. A mountaintop somewhere between India and Pakistan, artillery fire. I mean, as territory, as something productive or useful, those really don't count. Or is it a case of you let them take a half an inch, they might want to take a mile next time?
Well, that's the justification all the time for engaging in these things. But, the people that fight are going to engage in battles or something. They're not the ones coming up with these policies. It's someone safe in a room that's, thinking that this is the domino theory all over again or something crazy. But you don't know how much of this is even a real thing or not, because
as you look back through history, so many critical incidents were staged.
Yeah, well, the sea lanes are usually, considered to be open territory where it doesn't really matter who's in them. So anyway, I'm just trying to suggest that, I think China isn't really this big military power coming, but they're doing stuff economically to increase their influence, and I think that's a more effective tactic in the long run. And I don't know if I like it or not, but it is what they're doing, and it works.
What's the long-term outlook for oil? With modern fracking, every country in the world seems to be discovering huge reserves of either oil or natural gas.
Yeah, well, there's lots of natural gas that's been discovered and has helped to crash the price of natural gas. And often in a commodity market, when you get near a low, those are the stories you hear about. And when you get near a high, you hear about the opposite. So I don't really think that's a bearish story for gas. As far as oil goes, I really think fracking is somewhat of a myth, because the way it's presented to people is that here's this new technology, we can now get more oil, and that's all good and true, but they make it sound like the oil's cheap, and it's just going to be coming out of a gusher, you just press a button. And some even suggest that the United States, because of this, will be free from debt, because we'll just be this oil producer and it's going to fix all our problems. When in reality, the problem with it is that it's a lot more expensive to get out of the ground using these methods, and it's not going, and therefore it's not going to create this crash in oil prices or big drop in oil prices. I mean, look, we're living in almost like the Great Depression again here. The unemployment rate is the real unemployment rate is at least 12%. We're in a horrible recession, and oil prices have barely dropped at all. So I think it's the biggest myth of our age is that this fracking is going to create plentiful and cheap oil. It may be plentiful, but it may be very difficult and costly to get to, which is the real issue.
And of course, what's underneath the ocean floor? We don't know. But so many people are against exploring the oceans because we've had so many horrible examples of accidents and spills and things like that. I mean, that's a whole new area that really remains to be plucked.
Oh, yeah, and it's gigantic.
Japan apparently has found nodules of rare earths. China pretty well has that market sewn up right now. These are very rare elements and materials that are strategic. They're vital for so many things. And Japan says, we think it's economic for us to harvest these things off the ocean floor, and we'll make money doing it. It's one of those things where nobody knew. And I think it was one of those accidental discoveries by scientists.
Well, they need to find some sort of natural resource that they don't need to import.
My goodness. Is there going to be anybody left in Japan to turn off the lights?
That's a good question.
I just saw a story. A village had a big party because they had the first child born there in 40 years.
Is that for real?
Absolutely.
Oh, my gosh.
For 40 years, they couldn't, because they have, besides Mother's Day and Father's Day, they have Children's Day in Japan. A village that for 40 years had not celebrated Children's Day.
That's incredible.
Yeah, so that shows you what the birth rate's like.
Yeah.
And one of the things that I think, one of the hopes for Canada and the U.S. is the fact we have high immigration rates.
That's exactly right.
Those people work hard. They work very hard,
That's the thing about both countries really is that, I was talking about the stock market could have a bad bear market in a couple of years. We have these debt problems and on and on. And I think we're in a rolling financial crisis that began a long time ago. But it's one day it will end, and when it does, it will be there will be a new economic boom, but it's probably going to be fueled by immigration. I would think those people, like you said, those people are willing to work hard, whereas people, who may be 23 or 24 years old now, most of them don't have jobs. A lot of people, only half the people that are 16 even go get a driver's license. These are not people that want to work or do anything, so you're going to have to get these immigrants to come in when the economy gets better. And it's not just the fault. I'm not trying to just say people are lazy. It's just they've grown up in an economy.
They've grown up with everything. Yeah. The kids have grown up with everything.
Yeah. Well, they've also grown up in a bad economic environment where it's difficult.
Again, maybe just remind people how they can take a look at some of the things you've published.
Oh, all they got to do is just go to my website, wallstreetwindow.com, and I usually have several posts on there every week updating people on what I see going on in the markets.
Thanks a lot again, Mike.
Yeah, thank you.
Best of the holidays.
Yeah, you too.
Thanks to our guests, Mike Swanson and John Rubino, and thank you for listening. I'm Jim Goddard for Phil Mackesy. We're back next week with more This Week in Money.
This Week in Money is a production of Howe Street Media Incorporated.